Good evening, everyone. My name is Purvi, and I am from the fundamental research team of Kotak BCG. So I'll take you all through the webinar for healthcare and pharma sector today. So just before that, I'll give you a brief background about myself that I have a 13 years experience tracking this sector. I know it's a little difficult sector, but I'll try to simplify and make it a little interesting in the best way possible. So we shall start with the presentation round. So in the healthcare sector, at the moment, we feel that the near term is going to be a little painful. However, the structural growth drivers continue to remain intact. So before we delve into this, let me take you all to give you a brief overview. So as we know, India ranks 145th among the 195 countries in terms of quality and accessibility of the healthcare. And the main growth drivers for the sector continue to be rising income levels, aging population, awareness for health, preventive healthcare in terms of earlier we used to, only get a diagnosis when we do not feel well and when we approach a doctor and he would write a prescription. But now that because of the awareness of the health, people usually tend to go and do the test for a preventive thing. Medical tourism, as we know that, India is one of the country where the cost for medical is quite low, so getting surgeries done, having good doctors also helps us. So the infrastructure, although we are a little behind, but whatever infrastructure we have, the medical tourism kind of attracts it because of the talent pool that we have. R&D and clinical research, again, it's up, the technology that we Indians have, the talent that we have, helps us to reduce the costs for the MNC companies or the innovator companies who are trying to do research on new drugs. And contract manufacturing is the last step wherein when you get successful in doing certain researches, you get a contract manufacturing order. That's basically because Indian companies do help the innovators to cut costs and bring down their costs. So this healthcare segment is further divided into hospitals, pharmaceutical diagnostics, medical equipments, insurance, and telemedicines. Hospital continues to be the larger segment, wherein the market size for this currently is around $98 billion. Then followed by the hospital segment is the pharma segment, wherein in pharma segment you manufacture or do research on the drugs. And diagnostic is the third segment, which is around $9 billion at the moment, but is growing faster. In diagnostics, we know that it's the laboratory business wherein the analytical and diagnostic services are provided. Medical equipment, medical insurance, and telemedicines are the other segments which are coming up. However, we'll focus on hospitals, pharmaceuticals, and diagnostics at the moment. So if we see here, the healthcare industry from 2008, they had a CAGR of 16% growth. In FY17, if you see, it was 160 billion USD and is expected to grow at a CAGR of 16 to 17% by FY22 to $372 billion. Now this, I'm talking of the entire sector in terms of, it includes hospitals, it includes the pharmaceutical diagnostics and everything. Also, if we see the another driver that we expect going forward is the government healthcare expenditure, which if we see in FY13, 14 and 15 was around 1.2% of the GDP. This is expected to go up to 2 and 2.5% by FY25. The other thing, in the current COVID-19 situation, government has realized that infrastructure for healthcare is the need of the hour. So this expenditure is likely to improve in the upcoming financial years. And government will have policies to be implemented to get hospitals and diagnostics in place. So, like I said earlier, growing demand is basically because of the rising income and affordability of the Indians. Also, aging population to some extent and changing disease pattern helps. Uh, uh, Changing disease patterns, basically, I would like to say that we have acute and chronic. So, acute is very seasonal, specifically in winter season and rainy season. However, chronic is something wherein once you start diabetes, then cholesterol, hypertension. These are a couple of things which are called as a lifestyle or chronic diseases, wherein once a patient starts the medicine, they have to continue till the end of their life. So these are the medicines so because of the changing lifestyles, we are seeing a rise in chronic diseases. But better awareness and preventive care is also so these are the demand drivers basically. How does the government come in to support is that they are encouraging the policies for FDIs and the private sector to come in by reducing the custom duties and giving them tax benefits on life-saving equipments. Also, the focus is now to expand the research and development and distribution facilities in India by the way of use of modern technology and providing support to the global projects from India. Mergers and acquisition is another growth driver, wherein a lot of an MNC or innovator companies which are in US and EU feel that there are certain companies in India who are doing good work, so they would either have a tie-up in terms of technology transfer. They would either try to buy them out completely. So there are a lot of M&A opportunities also in this space. So currently, pharmaceuticals basically is divided into two major segments, that is active pharmaceutical ingredients, which is known as APIs, and then there is a formulation. So in APIs, you can have branded and generics, wherein if I have to explain you API, it's a key material that is used to make a medicine. And formulation is the final product, wherein the binders are used to make the final dosage in terms of a capsule or say vial or a liquid. It depends completely on the kind of suspension that you would like to have. So in formulations, again, you have two categories, that is branded and generics. So in branded, you can have cardiovascular, anti-diabetes, gastrointestinal, neurological. So the brand is something like, if I have to give you an example, when you have a fever or a headache, you would say crocin. So crocin is the instant name that we get in our head. So that's a brand. But if you have to see a generic name for that, that'll be a paracetamol. So this is the difference. So in brands, so basically Europe and US markets are where you need a lot of generics. Brands costs you more. Generics are cheaper. And branded products are used in markets like India or semi-regulated markets like African countries where people tend to identify with brands. The other example is amoxicillin, that is an anti-infective, again a Glaxo product, which is very well known. So if you have to see, apart from APIs and formulation, there are two other verticals in pharmaceutical industry that have emerged from in the last 2 decades. That's contract research and manufacturing services, which is CRAMS, wherein innovators and Indian companies together come to do contract research and contract manufacturing. So in contract research, you are given certain molecules wherein you need to work. You are given a therapy, you are given a line of work that needs to be done. So in case, for an example, if say Pfizer wants to get a oncology drug done, so they will approach a company in India who is doing contract research. So contract research players would be Syngene or Suven, where the innovator company would approach them and say that this is the drug that we would like to develop going forward. In case if it moves on from trials and moves to the it sees a success, and if it's identified as a success, you apply to the US FDA, and if you get a success there, then it goes into manufacturing level. So when you are a preferred contract research player, you also tend to get the manufacturing contract for a period of 5 to 7 years. So that's another arm which is developing and which is picking up faster. And in today's situation, when globally all the MNCs want to reduce their costs, they are looking at partnering with companies in India. Divis is one of the classic player, if I have to give an example, for CRAMS, where they are doing contract research and contract manufacturing for the MNC companies. The other arm that has recently, in the last decade or two, has emerged is the biosimilar play. Now, how is biosimilar different from a normal formulation? So, a normal formulations, these are the medicines that are formed from chemicals. However, a biosimilar is something that is developed from a living cell. So, it is difficult to make. It takes a longer point of a time to do a research on biosimilars and get those products to the markets. That's basically because, like I said, when it is developed from a living cell, the result of that particular drug is not similar on every human body that they do. So if in formulations you have to do a clinical trial on say 1,000 patients, so here in biosimilar you need to have a larger pool, maybe say a 2,000 or a 3,000 or 5,000 kind of a patient pool, because this, like I said, biosimilar is made from a living cell, so it does not work exactly in the same way on one person to the other person. That is why it is also expensive to make biosimilars. It needs a lot of deep pockets to be made. So in biosimilars, currently we have players like Biocon, Lupin, Dr. Reddy, who are doing a lot of work in this area and have seen success. Biocon has seen success by launching a couple of products in US and EU markets as well. So so pharma again is divided into two in terms of domestic business and exports business. So if you have to see the domestic growth trend here, so in the last 5 years, if you see, they have been growing at an average rate of 9 to 10%. So the Indian domestic market is around 1.4 lakh crore, that's $20 billion. And this is growing at 10%. However, because of the COVID situation right now, we feel that H1 is going to be a little difficult because the ordering pattern or the demand is skewed towards certain therapies only. So also because of the COVID-19 situation, a lot of elective surgeries are being delayed. So you may see that if I have to give you example, therapies like diabetology, anti-respiratory, anti-infectives. These are a couple of things where there is a lot of a demand because of the current COVID situation. Also, antiretrovirals are in high demand because globally they have been there's been a lot of a news saying that certain antiretrovirals are working effectively to contain the coronavirus in people, but it's still not completely proven. So we expect that over the next 2 to 3 years also the Indian domestic market will have a CAGR of around 10 to 12% growth. So in domestic, again, there's a 70% market share given to the generics. OTC is wherein over-the-counter drugs, wherein you do not need a prescription. You can just go to a chemist and ask for certain drugs. And then there is patented drugs, wherein there are certain oncology, that is cancer drugs, which still have patents, wherein no other companies, Indian companies, can sell them except for the innovator companies. So these are also kind of the drugs that are there in the market where the demand is still there. If you have to see, as per the FY 2018, the largest market share was for in anti-infectives. Then it was in cardiac and gastrointestinals. This is like 2.5 billion is for anti-infectives and cardiac, gastro, anti-diabetics. Dermatology is expected to see a decline. These are a couple of therapies where you may not see the demand going forward because of the COVID situation for a shorter period of a time. But in the longer run, we expect that these all therapies would grow, and they'll drive the domestic market as well. Exports, as we know, India is world's largest provider for generic medicines. So approximately 20% of the global generics or global demand is met by the Indian pharma in terms of volume. Uh, Apart from US, it is India where there are highest number of US FDA approved launches. Now, what is US FDA is that it's a US Food Drug Administration, which is a regulatory body which allows Indian companies, after inspecting their facilities, to export medicines to the US. So US currently accounts for approximately 32% of India's exports as per FY19. Until Jan 2020, we have had a pharma exports of around 13.7 billion. Apart from US, the larger markets where we export are Africa, Europe, Asian countries, and to some extent to some Middle East countries as well. So if you are into exports, so how do we value these companies, and how do we what's the model there? So it's like this, that you when you are filing, you need to file when you want to export certain product. You need to file that product from a facility which is US FDA approved. So you build a pipeline or a portfolio around that particular therapy, and then you take that entire thing to the US distributors, or Indian companies can directly also sell those there, but that would cost them a bit. So initially they would either partner with the larger chains. That is how they are done. But the logic behind that is also that you need to invest heavily on the research and development. So this research and development is basically on the drugs, wherein the drugs that are already there being sold in the US at the moment, but you need to reverse engineer, you need to make a generic of it. So you need to work on it and find out a way which is not exploiting or exploiting the patent that's already there in the product on the product. And once it goes generic, you can start selling that Indian companies can start selling those products in the US markets. So when the product goes off patent, the US company will grant approval to the Indian company who has filed for that product. So you need to invest heavily on the R&D also. So if we see from the slide, the Lupin and Cipla are a couple of the companies who have highest expenditure on the R&D as per FY19 numbers. And the R&D spend of the Indian companies in FY19 was the largest was Lupin with $225 million in FY19, and 173 was followed by Cipla. Cipla has a strong holding in inhalers. Lupin is trying to build up that kind of a pipeline in inhalers and dermatology. So in pharma, what are the supply side drivers, demand side drivers, and what is the policy support? So if you see on the supply side, Indian companies do have a cost advantage. Now, if one can always argue saying that China is a better supplier in terms of a lot of our APIs and key starting raw materials are coming from China. But one needs to understand is that a lot of our drugs are polluting. Environment polluting kind of a drugs. That is why a lot of Indian companies do not tend to get into those kind of manufacturing. That's basically also because the government norms in India are far stringent than that is compared to China. So if I have to give you an instant for this, if you see in FY19, China government has all of a sudden asked around 70 to 75 pharmaceutical units to shut down completely. That's basically because the kind of pollution that they were causing to the nearby environment was not accepted. So they all of a sudden asked those units to shut down, because of which there was a shortage of key raw materials and certain APIs that was first time witnessed by most of the MNC companies as well as Indian companies. So what happened is that was a first wake up call for most of the companies that you cannot be depending on one source, specifically China, because there is a lot of unreliability on their part in terms of supply chain. That is when it was the first time that a lot of MNC companies and innovator companies started seeing India as a second best option after China. But in the current second instance is current situation wherein in COVID, because of the COVID situation again, a lot of players saw disruption. However, this disruption is a blessing in disguise for Indian companies because in after China, there is a lot of strength that Indian companies have for manufacturing these APIs. So we can expect that over the next couple of years, a lot of companies shifting towards India for this supply chain, for the supply chain issues also, and to manage their raw material as well. So currently, also we have the only thing that was not favoring on our side was cost. But however, I think so. Right now, the situation is such that if you want a stable supply chain, MNCs would let go certain cost advantages. So we may have that kind of a advantage. So skill manpower we already have. So we are major manufacturing hub for generics, as we know that around 22% of the FDA approved plants are in India. So I think the supply side drivers are in place. The demand side also, with it, as we've discussed earlier as well, that there are increasing different kind of diseases. Accessibility to drugs has improved because of improving per capita income. So the penetration of health insurance is also now increased, and with the current situation, the government is trying to push medical insurance for each and every citizen. Also, because of stress related, there are a lot of diseases which have come in because of the change in lifestyle, and better diagnostic facilities have also flourished. So all these are also in place. So now we expect that going forward, the structural things are still in place, though there could be minor disruption because of the COVID situation that's currently going on. Also, the government's policies are going to be a little supportive in terms of increasing the infrastructure spend, reducing the approval times for new facilities. They're also planning to set up new pharmaceutical education and research institute, because as we know that the number of doctors per citizen also is very low compared to that in the developed countries. So these are all kind of things that is going to drive pharma pharma sector in the longer run. So where are the pockets where we have opportunities? So like clinical trials market, India is again a preferred clinical trial market because like costs are uh, one third of the regulated markets. So as of February 2019, we have done 3,618 trials so far. So these clinical trials are basically trials to test the efficacy of the drugs on the human tool. High-end drugs, like I said, earlier we were just making simple medicines from chemicals and things like that. But now Indian companies are slowly moving towards difficult to make medicines like biosimilars, like having suspension. So, for an example, if earlier if we had medicines for diabetes which were supposed to be taken say 4 times a day, or we had to take certain shots of insulin thrice or 4 times a day, so that injecting or taking remembering to take the pills was a little difficult for diabetic patient. So how have we emerged out of this is that Indian companies started doing research to make a drug wherein they are called as extended release, wherein if you take one pill, that pill continues to remain in the human body for say 8 to 12 hours, and then it can slowly start dispersing and can, so you do not need to take the medicine thrice in a day. So these are the kind of technology on which the Indian companies started working. So due to increasing population and income levels, the demand for high-end drug is expected to rise now, because like I said, that affordability index is also improving. People are moving towards drugs which may be a little expensive, but because that's basically also because Indian companies have that kind of a talent pool to develop those kind of drugs. Then there's penetration in the rural market. So with 70% of India's population, which is in the rural, the demand for generic medicines has gone up significantly because of the awareness that the government is also trying to create among the people. So a lot of companies are trying to invest in the distribution network in the rural areas. So if you see, a classic example is Glaxo is leader in vaccines. So a lot of vaccines that when a child is born, a lot of vaccines are given to a child. So Glaxo has penetrated deeply in this distribution in the rural market, mainly on account of the vaccines. And like we discussed earlier, contract research and contract manufacturing. This industry, which is estimated at $17 billion in 2017-18, is now expected to reach around $20 billion by FY 2020. And this can go beyond. That's basically because in the current situation, wherein we have this COVID-19 situation, a lot of players globally are now identifying Indian pharma manufacturers to be more reliable in terms of supply chain, in terms of compliance of regulations, and also quality of the medicines and the talent pool. So what we feel is that the pharma stocks have remained resilient during this period, and we expect that the Q4 earnings of the pharma companies is likely to be so this growth that is likely to come in. That's mainly because of sustained growth momentum in the domestic business despite lockdown. Now, if we know that the lockdown had started post 20th March, so it was hardly 10 days of the quarter 4 that got impacted. However, uh, instead of a fall in the demand, there was a lot of increase in the demand. That's basically because people started stocking up for their essential medicine. Instead of a 1 month stock, they started doing it for 2 months. Also, the inventory levels in India and overseas are maintained. So Indian companies usually tend to have a raw material inventory of 3 to 4 months with them. So most of the Indian companies had their inventories covered till May end to beginning of the June. So at the moment, so initially, if I have to take, say, in January and February, when this pandemic actually started, it was a fear that that again the supply chain is going to get disrupted. There's going to be a shortage of raw materials. Indian companies will not get the raw material in time, so the margins and profitability of the companies are going to get impacted. That is why all the pharma companies were seeing sharp correction in their prices. That is basically because of all these reasons. However, by the end of March, when India first announced their lockdown, by that time things in China had started settling. So in China, there were ground reality news in terms of that slowly the manufacturing facilities have started and they are coming back on track. So the shortage that was anticipated for the raw materials, that is not going to be there. There could be a certain lag, but beyond that, there was no disruption to the supply chain of the Indian companies is what came in. That was one reason. Second reason was that most of the other sectors, because of the lockdown, were seeing that manufacturing facilities partially being shut or the production being shut. But since pharma was under essential category, they were given go ahead to continue the manufacturing by taking care of following the rules that the government had already laid down. So in anticipation of all these things, the market anticipated that pharma sector may not see that impact of the COVID-19 situation or slowdown. Maybe there could be a some disruption for a quarter or two, but on the longer run, from second half of the FY21, things should start normalize and you can start seeing the pickup happening. And apart from this, also rupee depreciation. Rupee had depreciated a lot so from a year-on-year situation, if you have to see, earlier we were at around 68, 69 rupee a dollar. That situation has come to 74 rupees or 75 rupees a dollar. So this helps the companies which are exporting. Pharma sector also enjoys a natural hedge. That's basically because they are also importers and exporters, so they do not have too much of a impact uh, on their profitability because of the fluctuations now. That because they do not, most of the companies have this natural hedge. So in domestic, we feel that the chronic therapies will continue to do well, while the acute therapies will be under mild stress. So acute therapies generally is like cold and cough and having viral fevers now, that because of this lockdown, people are staying in house. So there's less chance of infection. There's less exposure to the viral things. So we expect that these kind of therapies may see a low demand, whereas chronic therapies, like we've discussed, that diabetes and hypertension drugs, these will respiratory drugs, then antiretrovirals, anti-infectives. These are the kind of therapies which may see growth going forward as well. Exports business again is likely to get unlikely to get impacted. That's basically because the overseas inventory and the rupee depreciation is likely to help them. So we feel that the pharma sector could see increased portfolio allocation due to the better earnings visibility. I would like to say here that maybe H1 of FY21 or the entire FY21 could be kind of a flattish to some marginal growth kind of a year, but one needs to look at FY22 when things start normaling. So H2 of FY21, we start expecting the normalcy to come in. Of course, we'll have to monitor the situation globally as well. That's basically because at the moment, the reality is that we do not have medicine for coronavirus right now. So till the time the medicine comes out, the situation is a little difficult in terms of how to control this pandemic. But H1 is something where we feel that there could be those blips that we may see. But so from the KI portfolio, we have the buy rating on stocks like Cipla and Lupin, and add rating on stocks like Orbindo, Loris, Sun Pharma, and Torrent Pharma. Here, I would also like to add a note that since we are in the midst of the earnings season, and all these companies are likely to announce their Q4 results shortly, so there could be some changes in their earnings estimates, price targets, and ratings in the near term, as and when their results are out. So the COVID-19 impact on the pharma sector for the shorter term, we may see that because of the high dependence on China, the pharma companies, which generally have 3-4 months inventory, may weather through this with some lag of say 10 to 15 days could be seen. But beyond that, we do not see a longer disruption that can lead to the cost inflation. Also on the US FDA inspections, we feel that companies where there are critical issues at the specific sites, those facilities will need inspection. So those inspections are going to get delayed because right now there's a ban on air travel as well. So the US FDA cannot inspect those sites. Hence, there's chance of those sites getting approved delayed. So in case of an example, if I have to give you, IPCA has been given an import ban alert for its 3 of its sites since 2015. Now, for the last 3 to 4 years, if you see, the management has rectified and corrected all the suggestions or issues that were there that were highlighted by the US FTA. So now in early FY19, they were expecting uh, inspection from the US FTA, which has got delayed. But in the current situation, what has happened is we know that HCQS, that is hydroxychloroquine, that is one of the drug which has been seen as a drug that could help COVID-19 patients. So in special conditions wherein if US FDA feels that there is a shortage of say particular XYZ drug, they would give the Indian company a special permission. In case of IPCA, it's given. They are, although their plants are under ban right now, they are given an export license for this particular drug. So with the interaction with the company that we had was that these exports will start from Q1. So we may see that numbers coming in the upcoming quarters. But that's not going to be quite significant. That is going to, the euphoria that was created around the stock was way too high compared to what the news flow was. So what we feel at the moment is that so there's a lot of a news flow that is happening, because of which a lot of the stocks are moving up and down. I would throw some more light on that later on. So like I discussed earlier, the Indian branded business, March was positive because of the stocking up, but post lockdown, there is some slowdown that is expected. That's basically because, again, uh, in the domestic uh, market, if you see, there were certain instances that have happened in the last 4 to 5 years. First being that in November 2014, the government all of a sudden announced and rehauled a very old drug policy of which was drug pricing control. They renamed it as National List of Essential Medicines, wherein they found 450 drug list saying that these are essential drugs, and they put a price cap on those drugs. So that was the first situation which completely overhauled the entire domestic segment, and we'd seen a lot of slowdown in terms of the market growing slow to 4 to 5%. So then in 2014-15, it's corrected completely and formed a base, and they slowly started moving or started showing improvement from 2017 onwards. However, again, the demonetization took place. That's when again the inventory channel and the supply channel was disrupted. And currently, because of this COVID situation, we are expecting some disruption to happen for a quarter or two, but it's likely to come back on normal from H2. So for the longer run, we do not see too much of an issue because of this COVID thing. And most of the pharma companies do not have high leverage, and so they should be able to weather the storms. So in this pharma sector, currently we prefer Orbindo, Cipla, Sun, and Torrent. Now that's basically because Orbindo has a very good US pipeline, US portfolio, wherein a lot of its drugs are currently being seen also in the shortage list. So because of that, the company is likely to get good approvals. They already have a good approval rate because a lot of filings are also done. They have a basket of more than 500, 600 filings, and wherein every year on an average they are getting 20 to 25 product approvals. So if you have to grow in US, if you continuously get product approvals, and if you are able to launch those products also, you continue to grow despite there is a pricing pressure in the US market, because a lot of it is moving towards generics. Cipla, specifically, if we have to see, it has a very almost 25 to 30% of its business coming from domestic, and US is around 15 to 20%. And the other markets like South African markets and the other EU markets tend to be the other 35-40% of their balance business is coming from the other markets. So at the moment, Cipla seems to be a quite balanced play. Also, recently we know that they have got an approval for an inhaler, Proventil, which was mainly again the approval came in much before than KI had anticipated. That's basically because there is a huge demand for anti-respiratory products in US, and Cipla has that product basket, so it was a beneficiary for that. Sun Pharma, they have a very robust specialty pipeline. So the couple of their drugs, Sequa, which is Illumia and Sequa, and there are a lot of other in the pipeline as well, which are very difficult to make. Very less number of players in those markets, so they tend to benefit out of these situations. On the domestic front, also, as we know, Sun Pharma is the largest player and has uh, a 4 to 5% of the market share. And is since majority of its basket in the domestic business is chronic focused, they are likely to see that continuous growth in the domestic segment as well. Similar is the case for Torrent Pharma as well. Torrent Pharma, you see 55% of their portfolio is almost domestic business, and then there is 20% which is 15% which is US, and the balance is the other Brazil and the other markets. So they are also continuously doing well. So we prefer that these are the four stocks in the current scenario at say current price levels or on corrections. We can keep on adding these stocks. On the healthcare sector, here for the healthcare sector, I specifically would deal with hospitals and diagnostics. So in the hospitals and diagnostic sector, we feel that for the near term, it's going to be painful. That's mainly because of the COVID-19 situation. We know that there's going to be slowdown in the walk-in patients. The operations, selective operations are also going to get delayed. Inability of regular doctors hours and shortage of staff is going to impact this. Also, lower incidence of road accidents and other travel-related medical health cases is going to affect this. Though COVID testing can partially offset this, but in the near term, we feel that is going to be little painful for diagnostics and the hospitals business. However, in the longer run, once the business starts resuming to normalcy, as and when the lockdown restrictions are lifted, we feel that things should start coming back to the normal, and the short-term working capital and liquidity challenges will also help consolidate help in consolidation in the space, wherein a lot of smaller or regional players or unregulated market may shift towards the regulated market. So we prefer Apollo Hospital, Narayana Rudalaya, and Metropolis for a longer run in terms of, I would say, having a call for more than 12 months. So this is basically the table wherein you can see the healthcare services and the pharmaceutical companies and their various ratings and target price. This can be accessed from the Kotak India Daily Report. So yeah, so that's all on the presentation side. So I have preempted certain questions already beforehand, like there were some of you will be having on the mind that the US FDA has gone a little lenient on the Indian companies. That's basically because of the COVID-19 situation, that the companies are expecting faster approvals, and but that's not the case. So that's if we see the plant approvals that have coming in the past few months, and the product approvals that have come in from those plants, these are the plants where there have been already less US FDA issues comparatively. So if you think that US FDA has gone lenient on India, that's not exactly the case. The other question that a lot of people have on their mind is that how do we see this COVID-19 situation turning out in a longer run? That do we see it being beneficiary for the Indian companies in the long run? We feel yes, that's going to be the case, but you have to have a very stock specific selection strategy. That's basically, again, so what kind of pharma companies we like to uh, stay invested in. Good management, good business model, good balance sheet strength. These are a couple of things that we look into the companies right now, because these kind of companies will weather the storm effectively. That is why we've suggested stocks like Aurobindo, Cipla, Sun, and Torrent Pharma, where they have strong balance sheets, where the business models are also such that they can weather the near-term issues also. The other question that was raised, that because of this COVID-19 trials that are happening globally, what are the Indian companies that could benefit? So one example that I would like to give here is Gilead is one of the companies which is in race, which is quite front, that they have been working on remdesivir, is one of the antiretroviral drugs where they have seen some positive results. But one needs to understand is that when at the moment this drug is under patent, under development, so none of the Indian companies can directly manufacture and start selling them. So here, one option that can happen is that Gilead can give license to the Indian companies or the other companies globally also to manufacture this drug. Now, if I have to give you a classic example, there was 4 years ago, there was this hepatitis C drug Sovaldi, which Gilead had in fact, they had discovered, and they gave licenses to almost like 20-25 companies in India, and globally they had given it to around 75 to 90 companies to manufacture this hepatitis C drug specifically. So this is the same thing that can happen, because right now that we know that COVID-19 is a pandemic, so they can give out those licenses. So if Indian companies apply for this license, and if they get this license, then they are going to be beneficiary of it. But it is still uh, 3 or 6 months, or maybe 6 to 12 months down the line. That's basically because any drug that is under development needs 12 to 15 months or 12 to 18 months to see the uh, light of the day, or to come to the market. In the current situation, we can say that maybe the US FDA can expedite the process, but still 9 months to 12 months would be the would be the period that would be required. You cannot go beyond, you cannot come less than 9 months. That's basically because the trials needs to be done. If it works on 3 people or 10 people or 100 people, that does not prove that it is going to work on lakhs of people. So the trials are very important. The other question uh, that we had also was a view on how do you value a pharma stock. So in general, the pharma stock, usually they have a trading range of a comfortable trading range of anywhere between 16 times to 20 times. They have a lot of stocks are way beyond this multiple also. That's basically because they have the street and values for the management, strong balance sheet, cash on the books, and all these things. So like I've already answered, that if you're looking to invest into companies, look at good management, good balance sheet, and a good business model. The other question that I would like to also answer is that what will be the challenges for the pharma companies and going forward? Uh, will every pharma company look to launch vaccine to fight COVID-19? I would say that's not the situation. For vaccines also, if we see, the largest player in India is Serum, which is again not a listed player, but it has a huge capacities for vaccines to be manufactured. Apart from that, every Indian company is not going to put in their resources to find out or work on the drug for COVID-19. They'll try to, you know, have, like I said, licensing opportunities, or they could, so for the licensing opportunities, players who have strong antiretroviral basket. So if I have to name Laurus, Cipla, Cadila, Lupin, these are a couple, Sun Pharma, a couple of the players who have strong antiretroviral portfolio. So you can say that they could benefit, but it's something like uh, you can guess. Apart from that, there were some certain specific questions related to specific stocks, like one being Glenmark, that what's the trend of this stock, sell or hold, and will this stock touch 400 levels? Now, what I understand of the stock is that the Glenmark has been having high leverage, and they are also due to their debt repayment of approximately 2,700 to 3,000 crores over the next 2 or 3 years. However, the business model that they have seems to be seeing a lot of a disruption that time. So it is classic situation wherein you can say that high leverage, and they've also recently monetized on certain assets, non-core assets, to get this debt down, but they are still struggling. They are looking out for out licensing of their couple of their drugs in the R&D arm that they have. So I would rather suggest avoiding the stock and selling the stock on rise. Will it reach 400 levels is something that the Q4 the numbers and their guidance, the company's guidance uh, and outlook for the next 1 or 2 years will decide the course for the stock. The other thing that I would like to touch upon is also on the MNC front. MNC stocks, they usually tend to have a high valuation or high PE. That's basically because they have cash, huge cash on the books also, and they are good dividend players as well. But beyond this, we do not have much of a view on the stocks, on the MNC stocks. That's basically because also these managements do not meet so frequently to get a idea or a outlook about their strategy for the Indian market going forward. I think so. That is all I have. So, do we have any other questions, Kritika? Kritika, do we have any other questions? I am done with my presentation and answering certain questions. The other questions, in case if you have, you all can please send it across. We can try and reply to you through email. Kritika, can we close the call, please?